It looks like we need more time for Bitcoin's bottom. Celsius Network gets the GameStop treatment from crypto Twitter. Bancor pulls the plug on its impermanent loss protection. Cardano is forced to postpone a major upgrade. Kyber Network keeps on keeping on. The Tron DAO denies the USDD depegging, and Ethereum Sepolia Testnet is live. Here's your Altcoin Buzz news. Hi, I'm Natalie and welcome to Altcoin Buzz. Altcoin Buzz is a crypto investing research company, so we're here to bring you the latest crypto updates for your trades and investments. And as early investors in the crypto space, we have an eye for potential opportunities that we want to share with you. Have a look at our Altcoin Buzz Access Pro Hub for all kinds of crypto opportunities. Plans start at $99 a month, and you can sign up below. And we have an exclusive giveaway with the MEXC exchange. There are only 8 days left for new users to sign up to win $6,699 in bonuses. Now, to be eligible, you need to start trading, and then you can tap into a chance to win $2,500 in USDT, a lifetime 10% trading fee discount, and a month's membership of Altcoin Buzz Access Pro for free. Click on the exclusive link below to start before the deadline. And don't forget to smash the like, subscribe, and notification buttons so you're always up to date with our news, deep dives, and great offers. Just keep in mind that this is not investment advice. So let's get to the news. A good majority of Bitcoin hodlers are still sitting pretty in this bear market. According to on-chain analytics firm Glassnode, over 56% of Bitcoin addresses are still in profit despite this bear market. So while those users can still breathe a little easier, there's still a major confusion and FUD when it comes to BTC's price movements. The Bitcoin USD pair did drop to $17,000 over the weekend, and it had investors on edge for a potential retracement of up to 84% from all-time highs. And yet, the highs that we've seen from Bitcoin still are not high enough compared to previous bull market tops and bear markets. But Glassnode's metric is pointing to more volatility. BTC price bottoms historically match up with less than half of addresses being in profit. So price action still has a ways to go before we see the elusive Bitcoin bottom. Celsius Network seems to have taken a page from GameStop's playbook. The DeFi lending protocol that is at risk of bankruptcy has pulled off 300% in gains in the last week, in a similar scope to the meme stock short squeeze event that sent the stock market into a frenzy. CEL tokens rose from a weekly low of 48 cents to a high of $1.55 in the last 24 hours. And it looks like crypto Twitter's behind the squeeze. It all started when word started to spread that Celsius could be in the middle of a coordinated attack, and a $20 million bounty was posted for anyone who could prove a third party was behind the Celsius withdrawal pause. The CEL short squeeze hashtag then took off, and here we are witnessing investors turn the market on its head once again. One of crypto's oldest DeFi protocols, Bancor, is the latest network to pull the plug on a major network feature. In light of the market's volatility, Bancor announced that it would be temporarily pausing its famous impermanent loss protection feature until the market stabilizes. IL protection offers compensation for when a deposited token increases in value on the secondary market, which is why Bancor has been taking lots of flack online for this move. Now users are stuck to either leave their liquidity in Bancor until IL comes back, or liquidate and take losses with the tokens dipping in the secondary market. So this market volatility is a crucial time to have impermanent loss protection on transactions, but that's why Bancor is in this position in the first place. Celsius and Three Arrows Capital have sold their BNT token rewards that have been growing since last January, spreading the makings for another liquidity crisis to Bancor. But is this the end for Bancor? Likely not. Sure, the protocol could have slowed down its withdrawals and introduced a cap for IL protection, and that could have saved its BNT tokens from a 40% dump. But like I said, once the market stabilizes is when IL protection will be reinstated. Cardano's Vasil hard fork has been postponed. The testnet upgrade was expected on Monday, but Input-Output, the development lab for the Cardano blockchain, says 7 bugs have stood in the way for the launch. Vasil is supposed to introduce increased scaling capabilities for Cardano, and now IOG is projecting a late June launch date, thus pushing back the anticipated June 29th mainnet hard fork rollout. Decentralized exchange Kyber Network has been navigating this volatile liquidity crisis by quietly continuing to rake in billions of dollars in transactions. In the last 5 years that Kyber has been operating, the DeFi protocol has done about $7 billion in transactions across its aggregating liquidity pools, IDO funding mechanisms, and integrations of Exodus and Trust wallets, and decentralized token rebalancing for the Aave and SEP platforms. And that's not even Kyber's wheelhouse. The Kyber Swap flagship product allows users to swap, farm, and earn liquidity, and with sustainable rates, which are key in these times. So have a look at Kyber's top 2 pools, the USDC, USDT, and wrapped Bitcoin Ether pools, on top of more features at the link in the description. Lots of eyes are still on Tron and its USDD stablecoin. USDD still has not been able to recover its dollar peg since Tron's TRX tokens were targeted in a short squeeze on Binance back on June 13th. USDD hit an all-time low of 92 cents on the 19th before recovering to 97 cents on the dollar, which is still not good for a stablecoin. However, the Tron DAO is playing damage control by saying USDD is actually not depegged, tweeting that it is simply a decentralized stablecoin that depends on an on-chain mechanism and collateralized assets. So basically, we have nothing to worry about. USDD was initially launched as an algorithmic stablecoin, which is the cause for confusion, but was quickly transitioned away from that after Terra's UST crash last month. And lastly, Ethereum Sepolia Testnet is officially live. This is the second test beacon chain behind the Ropsten testnet that went live on June 8th, and the Sepolia beacon chain is a big step before the actual proof of stake merge. Sepolia will eventually replace Ropsten's merge, and all of those dApps and projects will migrate to the new chain. And since this chain will be maintained even after the merge. In the meantime, Sepolia will be a new environment for developers to work out the kinks before the actual merge takes place in the near future. That's it for your Altcoin Buzz news update. So how do you think the market will be affected by the liquidity crisis in the future? Let me know in the comments. And if you enjoyed this video and want more insights for your crypto investing, please smash the like, subscribe, and notification buttons to get all our latest content. And have a look at the rest of our channel. Make sure you check out our MEXC tutorial on the screen. There are 8 days left, so do not miss out on this huge crypto giveaway. And as always, this is not financial advice, but we wish you the best of luck in your crypto ventures. Thanks for watching, and see you next time.